Okay, so here is the ultimate paradox. You dig 17% less gold out of the ground this quarter. Your copper production falls off a cliff, but because prices are going absolutely paradolic, you still generate $1.5 billion in free cash flow. Welcome to Earnings Unscripted. Today is May 11th, 2026, and we are looking at the Q1 results for Barrick Mining Corporation, ticker BARC.
Right. I mean, when you realize an average gold price of $4,823 an ounce, it forgives a lot of operational sins. The commodity is doing all the heavy lifting here.
Definitely. And just quickly, a friendly reminder that everything we say is just our personal opinion, definitely not financial advice. So please don't go buying gold mines on our account. But people definitely bought Barrick today. The stock had a pretty miserable quarter, dropping roughly 13% into the close. But the earnings reaction today was just a steady climb. It gapped up and kept going, up over 9% to close right at $47.
Yeah, because the street clearly looked past the immediate volume drops. If you just glance at the top line, revenue was down 13% sequentially to $5.22 billion. And actually, diluted EPS is down too. It came in at 96 cents, which is a 33% drop.
Which sounds terrible out of context.
Exactly. But you have to remember Q4 was completely artificially inflated. They had a $1.1 billion gain from selling off the Hemlo and Tongan mines last year. Adjust for that, and the core earnings are remarkably sticky. The real story is the operating leverage. Their EBITDA margin actually expanded to 66%.
66% for a physical business pulling dirt out of the ground with heavy machinery? That is wild.
It is, but they are absolutely battling reality in the field right now. You look past the spreadsheet, and they are operating in some incredibly complicated environments. I mean, Pakistan is the clearest example this quarter.
Oh, the Reko Diq copper project.
Yeah, the contractors basically threw their hands up, right? Citing security risks in the region.
Correct. They slapped Barrick with several force majeure notices. Armed violence in Balochistan basically brought development to a halt, and Mark Bristow, with CEO, is just refusing to force the issue or rush the build. He flew in to negotiate, and in the meantime, he is choosing to eat roughly $20 million a month in holding costs.
Geez, $20 million a month just to sit still in the desert. But I guess when your core product is trading near $5,000 an ounce, you have the balance sheet to be patient.
All right, let's get into the details.
Well, patience is easy when the balance sheet is basically printing money. But I think we need to talk about Mali, because honestly, the Pakistan situation isn't even the wildest geopolitical risk they navigated this quarter.
Oh, right. The great gold heist of Lulo Gunkoto? I mean, that whole saga reads like an international thriller.
It really does. If you look at the timeline in the filings, it is wild. Back in January, local authorities just stormed the complex with an attachment order. They literally loaded $92 million worth of physical gold bars onto trucks and shipped them to a state-controlled bank.
That is just terrifying. I mean, the pure sovereign risk of that actually is staggering. You spend billions building out an asset, and a local judge just decides to seize the inventory?
Exactly. And it basically paralyzed the operation for months. They put a state provisional administrator in charge of the mine. Barrick ultimately had to pay $250 million in a settlement just to get control and get their gold back.
Plus, they are having to swap out their legacy contractor for local replacements right in the middle of all this. Bennett Moore talked about that transition on the call, but changing an entrenched open-pit contractor on the fly like that adds so much execution risk.
Huge risk. It completely rewrites your daily operations. But look, the fact they survived it is a win. Speaking of execution, though, we should probably look at the cost creep, because everyone is hyper-focused on the gold price, but the all-in sustaining cost, the AISC, it marched up 8% sequentially.
Right up to $1,708 an ounce.
Yes, and I know people will say, who cares? Gold is near 5,000.
Wait, but gold went up 15% in the quarter. So a lot of that AISC jump is just mechanical, right? Like royalties and production taxes naturally scaling up with the price of the metal.
It is partly mechanical, sure, but that inflation still gets baked into your operating base. When prices eventually correct, those taxes don't always vanish immediately, and the costs suddenly feel incredibly heavy. Management absolutely knows this. Helen Tai was very careful on the call to emphasize this. She said the higher gold price amplified improvements already occurring in the business. She called the results durable.
Right, because she has to convince Wall Street this isn't just a commodity price fluke. They need actual credit for operational efficiency, which probably explains why they are moving so fast on the North America spinout. Ring-fence the safe, highly efficient assets away from the international chaos.
That is precisely the play. They are targeting a minority IPO for the Nevada gold mines and the rest of the North American portfolio by year end. Bristow said the SEC filings are coming late summer, and they have already handed full autonomy to that regional executive team.
And it seems to be working. Bristow mentioned the standalone focus generated productivity increases way quicker than expected, like the Carlin Roaster yields hitting their best mark since 2022. It turns out when your managers can just focus on digging rock instead of negotiating with foreign governments, they get pretty productive.
Unbelievably true. And Bristow is clearly feeling very confident about that separation. He had this very specific comment regarding their joint venture partner, Newmont. He essentially said the relationship has completely changed and even invited them to come look at the 4 Mile project early. You don't strike that posture unless you are totally sure your standalone model works.
So you basically have two completely different companies living under one ticker right now. You have one half fighting off sovereign takeovers and force majeures in emerging markets, and then the other half running completely autonomously and getting dressed up for a Wall Street roadshow. So where does this leave them heading into next quarter?
Well, physically, they are guiding for a rebound. Management expects Q2 gold production to step up to somewhere between 730 to 770,000 ounces, with a peak expected in the back half of the year. So the seasonality excuse should hold.
Right. And they actually hit their targets this time. I loved that moment on the call where Mark Bristow just kind of stared down the analysts. He said, Barrick historically has been criticized for not delivering on its commitments. I just want to highlight that this is the second quarter that we have delivered on all of our commitments to our shareholders.
True. Very true. But you have to look at what they are committing to financially going forward, because this is the part that feels somewhat risky. Last quarter, we talked about them pausing the buyback. Well, they just pivoted again and authorized a massive $3 billion repurchase program.
$3 billion on top of the new dividend policy? Because they are now paying out 50% of attributable free cash flow too, right?
Exactly. They are shoveling cash back to shareholders, which is great if you own the stock today. But you are funding a huge capital return program while simultaneously bleeding $20 million a month in care and maintenance in Pakistan, not to mention rushing to change out your core mining contractors in Mali.
It feels like they're betting the house that gold price just doesn't flinch, because if gold drops $1,000, that math gets incredibly tight.
That is exactly the issue. The margin of safety is not in the operations right now. It is entirely in the macro environment. If gold stays near $5,000, Bristow looks like a genius. They fund everything and spin off North America beautifully.
And if it rolls over?
Then you're stuck holding a very expensive bag of geopolitical headaches.
You always know how to cheer me up, Miro.
I try. It is a gift.
But honestly, you do have to respect the audacity of the pivot. We will definitely be watching for that late summer SEC filing for the spinout.
Assuming local judges do not seize the paperwork first?
Oh, come on. Okay, that's a wrap on Barrick for this quarter. I'm Susie.
And I'm Miro.
Thanks for hanging out with us. We'll catch you after the next bell.
If you want these earnings drops to just show up for you, you can go ahead and follow the show. And as a quick, transparent reminder, Miro and I are actually AI-generated voices, built to see if technology can turn dry filings into a real conversation. We are always tweaking this, so if you have feedback or a ticker you want us to tackle, just shoot an email to earningsunscripted@datamadness.ca or grab the X link in the show notes.
Talk to you next time.